Did it ever happen to you that you identified a nice signal day from the day before, and then you come into your session and you're completely overwhelmed what's happening in front of you? So many conflicting signals, price moving, and you are completely overwhelmed what's happening and what you should do. I'm a Stacey Burke style trader that enhanced his system with some of his own elements, and I will explain you in this video what to look for, how the day could set up, what are the different archetypes of setups, and how to trade them specifically. This is part 2 of a 3-part series, how to trade Stacey Burke style successfully. Quick recap. What did we discuss last time? We were discussing thesis generation. What are the signals that are provided by the Stacey Burke style system, and what you should look for based on that? What are the key issues that can happen, and how to trade it with multi-timeframe elements that I propose. So the signals: first red day, first green day, 3 days of longs, inside day, day 2, day 3 trend. The key issues we discussed is that Stacey is proposing prices always in a box. But what is your box? That's pretty variable. Multi-timeframe approach proposes to really just check the major timeframes and always track what price is doing according to the previous high and low. So the 8-hour, the daily, the weekly, and the monthly. Once you track that, you already have a very mechanical approach to look at that. Then, key question: are other time frame traders driving? So how to really see that? He's talking about that a lot, but he doesn't give you a real mechanical signal for that. Multi-timeframe just tracks the breakouts across time frames, and once you see price is in breakout, price does only 3 things. Once it's in breakouts, you see other time frame traders are still driving. It's not failing, it's strong, it's just moving on. Then, number 3, who is trapped? That's one of the key elements of his system. Peak formation high, don't counter trend them. How to identify those mechanically? Multi-timeframe proposes to just look at the fakeouts of the different time frames, because a fakeout is always a breakout that pulled in breakout traders in one direction, and once it loses the level, it pulls down again and traps them. So they are trapped, and then often price just moves away from them to punish them. Then discussion: what is your setup? This is the big discussion. What even is a setup? What is a signal? What is a setup? Stacey is very blurry about that. He always names his signals and setups similarly. And what I propose with multi-timeframe is to really separate that clearly into signals and then setups. And setup for me is the setup on the day, and this we will discuss especially today. But for setups, to judge them, multi-timeframe proposes to look at multi-timeframe alignment. This is also what we discussed last time. Then let's look at the takeaways. So what were the key takeaways? Here is an example. First red day situation, weekly breakdown, maybe fake out high, day 1, day 2, day 3, first red day, pulling back down, then retesting, reclaiming this a bit, then losing the level and giving the short setup. What's the common issues here? Typically, it happens that people are counter trending parabolic moves. So once you're shorting above this previous day high, you are still at risk that this is just a retest and it just moves on. So you really need to wait until it loses this level. Then it's a clear sign of weakness, traps the traders in this peak formation. Also a nice head and shoulder pattern here. And then the key discussion is always, what's the final confirmation of the setups? So what I propose with multi-timeframe approach is to really watch in detail the 8-hour and daily breach levels. So you always want to have the bias of the 8-hour and the daily aligned. So they should have a fake out high or a breakdown, then your setup is aligned and confirmed, and then you seek higher time frame alignment for your setups. So you always want the week and the month in your back so that you are really trading the rollover into the trend, and the higher time frames drive your trade into your target. So far, so good. This is what we discussed last time. We looked at a few examples, but what then? Because then this is more or less thesis generation, but then you come into the session. During the session, a lot of things are happening, so many moving parts, and you really have to discuss and decide for yourself when and if to take this trade. Yes, the 8-hour and the daily are a critical level to even make the setup relevant, but it's not enough, of course, to confirm it, and definitely not enough to go into a trade. So let's look at this one level deeper. What's the key issue with Stacey here around this time frame once you're in the session? He can be very confusing. I mean, he always says the day needs to set up. I collected his nuggets over months, years, and made sense of them. They all are really good and great, and they help you. But for a especially novice discretionary trader, this is toxic. This is impossible to follow everything. You know, is it a pump and dump? Is it a dump and pump? Look for the easy money. Do not counter trend peak formations. Don't fight the trend. Breakouts before the session starts. Mostly revisit or reverse. In case of uncertainty, stick to low-hanging fruit. He has so many hints for you to follow. This is almost impossible then to really judge, does the day really set up nicely, and how to follow that, and how to decide if you should take a trade or not. So what is my proposal here? For me, the common issue around that is that people are forcing a thesis. So once you have a signal, like for a strat day, people are coming to the screen with this thesis in mind, and they really want to take a first red day short trade. This is dangerous because you really have to be extremely open to judge what the setup on the day does. How does it develop? And what I'm proposing here is that you always keep in mind that thesis generation works top down and setup confirmation works bottom up. This is for me absolutely fundamental, and also in line with what most of the educators like Mark Douglas are talking about. You really have to be sure that your mind doesn't want to see something. You need to stay open. So how does this work? This is what we discussed last time. You really start with the higher time frame bias, look at the weekly template, you look at the daily signals, and you define an overall thesis. This is very relaxed. You do it before the session, no stress. You're absolutely in your planning mindset, and you have all the time in the world to define that thesis. Then you write it down. I do a personal heat map where I make notes of that. There's many ways to do that. So you need to kind of write it down and be sure that in the moment you have access to it again. But then once you come into the session, you start off completely open and free again. I propose to almost forget that. Of course, you have focus pairs that you watch deeply, but you don't want to force anything, and you don't want to have a preoccupied mindset what's going to happen. So you really start bottom up. So you look at what is happening in the session. What is it doing to the major levels? Who is trapped? That's how I start. I look at the H4 and the 8H and really wait. What is it doing to that? Is it faking out? Is it trapping someone? And if I see a trap, I'm going further up. What could be the intra-session setup? Hour 1, hour 2, hour 3. So I mainly trade third hour. So you see, do we have 3 hours of rise? Peak formation high, first hour, peak formation low, second hour, third hour blowing off. What could be the pattern intra-session? Then developing setup on the day. This is what we will discuss, especially now later on. What's the pattern of the last 2 sessions and now the third one? 3 session setup. That's the key to everything. So do we have 3 sessions of rise? Is it parabolic session? Is it a deathline setup? This is the key to judge what's going to happen. And then once you have that, you again reflect on the overall thesis. So what's happening on the day? Does this now fit to the stuff you were discussing before, or does it contradict? And then you start again. So reiteration. With major time rotations, you go back down and start again. Who is trapped? What is intra-session setup? What is the developing setup on the day? Then you reflect on the thesis, and so on. And you do this as long as you really get full confirmation of everything. Once this all aligns and this thesis fits to your overall thesis again, top down, documented, bottom up, developed new on the day, if these two things come together, then you are in the position of going ahead. You have green light, you take your trade. So what are the basic setups on the day? Here are short examples. This is taken out of my playbook. I've looked at hundreds, thousands of archetypes and found the key archetypes that are relevant from my perspective to assess the setup on the day. And you will see these things are happening over again every day on every pair. And once you have those in your mind, it immediately clicks. And then you can decide, does this setup on the day fit to my overall signal and to my thesis? But let's look into them. For me, there are 2 major categories. We have high of day, high of session, long squeeze. Same could be, of course, for long setups on the other side. And we have low of session, low of day, parabolic. So it's a bit similar to the basic patterns we discussed last time. This is the reversal situation. This is the continuation, parabolic continuation situations. So what are the different ones? We look always at 3 sessions here, discussed mainly for New York session traders. So we start Asia, London, New York, and look what the 3 sessions are doing. So the first one, very often happening, is the Deathline setup. So Asia breaking out of previous day high, potentially could also be another level, then coming back in, London trying to break out again, failing, New York again trying to break out, so slamming into a level and trading around it along the whole day, and then you get maybe a last leg up, and then it collapses with a long squeeze setup, failing and potentially trading to the other side of the range. Then second archetype, Deathline setup. Breaking out again, the first part is the same, then really staying broken out, so collecting volume above this level. And then Stacey talks about this setup a lot. Then it trades back down into the New York session. You could have a pump and dump still there, but often you don't. Often is rather low-hanging fruit. So then with time rotations, it just pulls down, traps everyone above, and then pulls away from it. That's the Deathline setup. Then 3 sessions of rise. Asia breaking out, London breaking out, New York breaking out, potentially even with New York Open, what you often see, blowing through the top with one last very parabolic move higher, and then failing there immediately, potentially with time rotations, coming back down, losing the level, and then collapsing completely back down. 3 sessions of rise, high of day, reversal. This is the 3 reversal patterns for me that are relevant. Then we have the low of session, low of day parabolics. This is a completely different situation because these are also working on the day. So you build the setup during the day, and hopefully it also aligns with the higher time frame setup, and then you get your reversals. These here mainly need also higher time frame parabolic situations, except the parabolic session that builds also its own fuel. But a parabolic day, for example, it really needs a higher time frame coil or a day zero. And then you see this is kind of pushing through the day without looking back. That's the parabolic day. So you just have a parabolic channel. You might get a stop hunt into New York Open, and then it just goes further, ain't coming back, and just blowing on. Parabolic session is a bit similar, but also can happen with like first red days or so, that you have a peak formation low, Asia breaking lower, trapping shorts, London breaking higher, trapping longs. Then you consolidate into New York, and then you get a parabolic channel, descending triangle blowing off to the bottom, potentially breaking through previous day low. This would be parabolic session. Also a very nice setup that typically goes then into range expansion mode, and you can hold on for longer. Then the last archetype, low-hanging fruit, is a continuation trade. It can happen, of course, with all of those archetypes here. Typically, there's two variations. Either you break down the session, retesting the session low and then collapsing further, but it can also be that it loses it completely, and then you retest previous day low or any other level, and then go on from there in a breakout mode and going into range expansion. Long-hanging fruit, also Stacey's favorite. He always says, in case of uncertainty, stick to low-hanging fruit. I agree with that, especially with higher time frame alignment. This is a very nice trade. Many people try to buy the low in these situations. This gives you even more fuel, and once you have the higher time frame pressure downwards, this can be very nice and high probability trades. So how does this fit to the signals? So this is taken out of my playbook, and I've been working on this for a long time. And this is kind of relating these different setups we just discussed to the signals. So if you have a first red day signal, what is the setup on the day that's typically happening? And that makes sense, because you want to judge, as we discussed before, what's happening on the day, and does this fit to a higher time frame constellation and to your signal. So for a first red day, you typically want to see 3 sessions into a high. A 3 session of rise is a very classic situation, or a parabolic session. Not parabolic day, because you don't have a higher time frame parabolic coil. Sometimes low-hanging fruit, but there's also not enough fuel for that. Deathline, only a session deathline, because for me, once it takes previous day high, the first red day signal is invalidated. Maybe then you get a deathline setup, a new one, but then it's not a first red day anymore. And like this, you read the whole table. I won't go through that in detail. You can pause and look through that. Just for the logic, you see you have the reversal signals up here, and they are rather high of day, high of session, long squeeze, of course. You have the parabolic signals here in the middle, and the continuation ones. These are ones that are typically found here with parabolic session, parabolic day, low-hanging fruit. And then, interestingly, also important, there is some setups that don't need any signal. So, for example, as 3 sessions of rise in the day, or a parabolic session setup, once it's nicely formed, you can trade it intraday or even intra-session without any higher time frame confluence. So you just look that you not counter trending anything, but you don't necessarily follow higher time frame signals, because a nice 3 sessions of rise, if you have this on the day and it fails at the top, you don't care what else is happening. Of course, if you're in a parabolic channel, you need to be a bit careful, but otherwise this can be a very nice trade with ignoring everything else that happens on the higher time frame. So that's the logic. And then from there, we step one level deeper into multi-timeframe trading again. So how does multi-timeframe now help you to trade that? You remember this chart from last time. We discussed this on the daily time frame. The thing is, multi-timeframe trading, as everything else, is fractal. So this is working on every time frame. And for the setup on the day, we are mainly watching the 8-hour level and also the 4 hour. These two kind of give you structure for the day. And you again think the same things. Price is always in a box. So you check the previous 8 hour high and low. How is it trading? Once you come into New York, you have a nice 8 hour closing at 9 o'clock. And then you see, are you inside? What was the last level hit before? Are you coming out of a fake out high or low? And then you wait for a price to break out. Then you are bullish on the day. Maybe it fails and comes back in. Then you're bearish. Maybe it stays inside. Then it's neutral, or depending on what's happened before. If you're coming out of a fake out high and you are inside, then it's bearish. That's the logic. Same thing as we discussed on day. Also works on the 4 hour, works on the 1 hour, down to also entry, what we will discuss in the next video on the 15 and on the 5. It's the same thing, always the same pattern. So how to follow that over the day? What is the key elements to look at to confirm a setup on the day with multi-time frame approach? So again, this you have seen last time. I just pulled it one time frame lower. Last time we had month, day, and 8H, or month, week, and 8H. Now we have week, day, and 8H. So meaning, for example, you're in a weekly breakout, daily breakout. Breakouts show the trend. So you follow the trend. Other time frame traders driving. Same thing. Into the day, and then on the day the 8 hour might break out again, so you're still in an uptrend and no way to short anything. Then maybe you get an 8 hour 3 long. So these 3 long and first reds signals also work on the lower time frames. It's not only a daily signal, it's also on the 8H, it's also on the H4, it's also even lower, but I mainly look at them on the 8 hour and the 4 hour also. So 3 longs, first red. It's also important for those. Then you wait for the fake out high, 8 hour fake out high, first strong bearish signal. Then you potentially wait for the daily fake out high, and then you already can see it's rolling over. So how do we use that really? To confirm a setup, I always want to have the daily and the 8 hour aligned. That's for me the nucleus for every setup. I never or very rarely counter trend the daily or the 8 hour bias, especially not the 8 hour bias, only in very overextended situations. So this keeps you out of a lot of trouble. And if you use my indicator, the setups that are flashed by my indicator, the Trend Predator Pro, they all look at a alignment of day and 8H. So once you follow that, you're already away from a lot of trouble. Then fake outs show the traps, as discussed last time, especially on the 8 hour on the day. Timing gives the rhythm, very important. So really look at time rotations. Every new 15-minute, every new 30-minute, every hour brings in new traders, and you never trade into these rotations, only if you're in a very safe position, especially the 1 hour rotations. Wait for them to hit, and then also don't go in immediately. Wait what it does. Does it fake out? Does it pull back? Does it continue? For every candle close, you get new traders with a new plan. And you want to wait until they show their hand. You want to wait until you see the trap, and then you follow it. And then again, strong setups show alignment of time frames, of the lower time frames, but then again up to the higher time frames. That's the logic. It's the same logic we discussed last time, but now we are really driving this down to the setup on the day, to the sessions, and to the 8 hour. And we now will dive deeply into the different setups. So now I have 6 setups. The only one that I don't discuss with you is the parabolic reversal, because I wouldn't recommend it to anyone. It's a real expert setup, and I will stick now to the other ones. So this 3 are high of day, high of session, long squeeze reversals, as we just discussed. Deathline setup is the first one. What is happening in a Deathline setup? Situation: market breaking out and trapping volume high with the peak formation high, trading around the breakout level. So here, previous day high, Asia breaking out, trading above, maybe then you get even an 8 hour fake out high, first bearish signal, London completely trading above this level, pulling down, maybe here lower low on the inside. Then it comes back up, typically comes not very far up, and then loses the daily fake out high, the daily breakout level, making it a fake out high. And then a potential entry here would be once it's clear that it's pulling away from there with an 8-hour breakdown. So the 8-hour low here in New York with time rotations, once you break down, maybe you wait for another 5-minute fake out high. We will just discuss this entry strategy in the next video, just teasing it a bit here. And then you have a very nice setup that is confirmed with all the time frames. You also look, of course, on the higher time frame confluence. You might have 3 days of longs, weekly breakdown, weekly fake out high. So how to trade it? You watch for the 8-hour fake out high in London, especially. You observe the Deathline and really then wait for the 8-hour to show you a fake out high, continuation, and then a breakdown. You need to stay open with the setup. That's very important, because here this lower low here can also be a fake out low on the 4-hour, for example, and just trapping shorts, and then you just get a continuation signal. It's not yet clear once you're trading around that. That's almost 50-50. You really need to wait for the market to show its hand. And then you really wait for time rotations. You watch the daily 8-hour H4 alignment to confirm, maybe 5 or 15 minutes for a confirmation for the entry, and then you have a nice trade potentially back down to the low of the day. So here, first example, Deathline setup. It's taken out of my backtesting sequence because there I analyzed a lot of setups already. This is gold, 23rd of October, coming into 3rd hour New York session. Everything what you see here on the chart is done by my indicator, the Trend Predator. Here the Pro version that also shows the setups. So it draws you all the highs and lows. So here the orange ones are the 8-hour highs and lows. The gray ones are the 4-hour. Blue is daily. Down here you see all the bias, so month, week, day, 8-hour, 4-hour. You see, is it in breakout and fake out on the current? Is it breakout, fake out on the previous? So this is kind of the multi-timeframe bias. And then you have all your Stacey Burke signals. So 3 longs for the different time frames and potentially first green or red. So here you see with one glimpse all the information you need for the setup. And then the Pro version even reads this constellation, so it reads the context. You're in a reversal context, and the setup would be fake out high, continuation, high of day, counter trend because the week and month are in breakout, and you have the quality 1 star because it's a counter trend trade. But let's look at the pattern. So you see here price coming up, breaking out of previous day high. This is London, trapping volume up high. It does a nice head and shoulder formation here above the high, and then coming into New York it loses the previous day high. So really trapping all this volume above the previous day high, making this a daily fake out high. You already see here an 8-hour fake out high coming out of London. So this is already a bearish signal. You don't want to short here because you would short into the daily fake out high. But here, once you lose that level into New York open, or I think that's 2nd hour, I typically trade 3rd hour, as you know, but potentially you could already take it here. So this traps all that volume, and then you get follow through. And everything, all these lower time frames are aligning and really showing you a very nice Deathline setup on the day. Let's see how it works out. It then comes into 3rd hour. So here you can even wait for the 8-hour to break down. Here you have an 8-hour breakdown into third hour, 1 hour time rotation. There you need to be careful, but you see then it just blows on. Then you can scale in even further here, or if you're conservative, what I typically do, just consider trades from third hour. This could be your entry, and then you take it from there, and you see here a target could be previous day low even, or what I sometimes do is then, if I'm in such a nice position, I wait for a reverse entry signal. So I wait for the 15-minute fake out low. You get it here, and this is then your exit for this trade. Very nice pattern, exactly matching what we just discussed. So next setup, 3 sessions into high. So I won't show an example of this because it's very close to the first one. But still an interesting one. Situation with 3 sessions into high is that you have 3 session trading into a level, previous day high, previous week high, whatever. So 3 consecutive sessions trading into a key level, failing to stay above. So up, down, up, down, up, down. And then you get a blow off squeeze away from it. Again, the same logic. You might get an 8-hour fake out high here even, maybe not, maybe it's only a 4-hour, maybe it's a daily fake out high that confirms here additionally. Then you can trade it from the inside, or you take the continuation as a low-hanging fruit once it loses the 8-hour breakdown level. How to trade that? You watch for the 8-hour fake out, stop hunt, and explosion with time rotation. So once you see it's trading into the level and failing to go higher, you typically wait for a final stop hunt that traps one time to the top, and then with time rotations you get the explosion that you can then just jump into. What you often see is a creeping trend, then descending triangle, an explosion with time rotations, and potentially, as just discussed, a low-hanging fruit continuation. How to follow that? You really watch again the daily, the 8-hour, and the 4-hour. So this previous day high level is critical to follow. You never short once you're above that, and then you're following the 8-hour. So this 8-hour, you really want to have a fake out high or a breakdown, and you also don't want to counter trend any 4-hour signals against you. So sometimes you get a 4-hour fake out low here, for example, then you wouldn't short unless you get another fake out high, stuff like that. So this is the 3 sessions into high. Overall logic relatively similar. It's just not trapping volume above the level, but it's rather collecting volume sideways. Here you see you have an 8-hour inside bar, and this is also traded but like an inside bar. So fake out high continuation potentially, or fake out high reversal and then range expansion to the other side. Issue here also, sometimes you just get the continuation. It could also trap volume here in similar to a Deathline setup below this level and then go higher. So you again here want to have a clear fake out trap on the lower time frame, let the market show its hand, wait for the major time rotations, and then just follow the move. Then very popular setup, 3 sessions of rise. This has typically multiple variations, so you can trade that in breakout. So Asia breaking out at the first session breakout, then you are in a daily breakout. That means you need to be very careful because you have the higher time frames against you. This could also be a trend trade, but then you get a second breakout in London, you get a third breakout in New York, and then once you get a nice 8-hour, maybe 4-hour fake out high, it depends on how aggressive you want to trade that. I will show you this in the example in a minute. And then you again have an entry here with as much low time frame bearish signals as possible. So in breakout you really want to have a 4-hour or 8-hour with time rotations pulling back late session. Sometimes you have the whole structure within the previous day's range trading back up into previous day high, maybe with higher time frames bearish signals. That's then a very, very nice setup. So it's a pullback against the trend and then the rollover back into the trend. This is then a extremely nice setup, 3 sessions of rise into the breakdown or daily fake out high level, and then you take the reversal again with the 8-hour confirmation from there back down to the low of the day or the daily breakout level. So situation, 3 consecutive session breakouts, that's the pattern. That's also Stacey Burke master pattern. I mean, he's shown this a lot of times again and again. So potentially hitting a level, but also could be in all-time highs. So breaking out 3 sessions in breakout, all-time high, collapsing end of the day. How to trade? You measure 3 levels of rise. You check for the 8-hour, 4-hour, 3L first red on with the indicator potentially. So you want to have 3 longs on the 4, on the 8, and potentially you also get a first red one before it then collapses. And then again, you watch the 8-hour, 4-hour fake out high for confirmations, key time rotations, trapping, new volume coming in, end session, and then you just follow the market with the collapse. So here, next example, 3 sessions of rise. It was gold again, 21st of October last year. You see here, previous day high, price breaking out. You see 8 hours, 3 longs, day 3 longs. So this is a 3 sessions of rise in breakout. So you see it's pretty bullish. Month is in 3 longs, day in 3 longs. So you can potentially look for reversals, and then especially if you have 3 breakouts on the lower time frames. Here you have 3 8-hour of rise, also 3 sessions of rise, Asia, London, New York. Then you can potentially look for reversals end of the day. You see here the indicator even flashes still long signals, breakout continuation, low hanging fruit. So because it always tracks it from the 8-hour. So as long as you are above the 8-hour, you need to be very careful, and you would even counter trend the indicator signal. But from on the context side, it says an uptrend yellow. That means it's an extended uptrend. So then here you definitely want to wait for the 4-hour to be faked out into the 3rd hour New York session. So that's your potential first entry. And then once it fakes out the 8-hour, this is then the safer entry. This would be your 2 potential entries. You can also scale in, and then the target would be low of the day, the daily breakout level. Let's see how this works out. You see here faking out the 4-hour, coming back down, then losing the 8-hour. This is the 15-minute chart, and then collapsing all the way into the 8-hour. The first 8-hour of the day, so that's low of the day. That's the typical entry exit point here, and you see from there it just goes sideways. So that is your typical trade. Then it builds up during the day, first session, second session, third session. You see also here nice 3 pushes, then 3 lower time frame pushes if you like. It's always the same pattern. Then it traps volume above the 4-hour, potential first entry, risky because the 8-hour is still bullish. Then it loses the 8-hour level, pulling back down, and then you just take it from there, target low of the day. And you see here also very nice risk reward on this trade. So this would be the 3 sessions of rise setup on the day. More setups. Now the low of session, low of day parabolic continuations. We had the reversal ones, now the continuation ones. This is the short side. It can also be, of course, the whole thing flipped in the other direction to the long side. So I don't discuss both of them. It's just a mirror image of what I'm shown here. But I will show you in the examples also a long setup of those. So let's look at the first one, parabolic day. Parabolic day means that you have a higher time frame parabolic setup. That's very important. So you're coming out of a day 0, inside day, something like this. And then the whole day just moves into one direction. Creeping trend, parabolic channel, just moving on, never looking back, just maybe some stop hunts, but never kind of doing a peak formation in the other direction. So that's what Stacey always says, never counter trend peak formation. You might have a peak formation in Asia, a peak formation in London, another peak formation in New York. You just follow it and it never goes in the other direction. How to find out? So you really need to have the parabolic signal from the day before. Day 0, inside day. Otherwise, this is not relevant. And you will not look at breakout continuation trades like this. You really need to have the higher time frame pressure and also the higher time frame alignment. Potentially 3 days of longs, maybe first red day. You want to have the week in breakdown or fake out high. And as I discussed, maybe a day 0. Then how do you trade that? You wait for the parabolic channel to form. It needs to be clearly visible that it's a creeping trend channel that forms over the whole day into the New York session. Then into New York, you really, again, need to be very careful because these parabolic trades, they always do a stop hunt. So you wait for later in the session, maybe the stop hunt comes also with equity open, but you really want to clearly see the stop hunt, and only if the New York volume is trapped in the wrong direction, then you follow it. So watch 8-hour, 4-hour levels to confirm. As you see here, it's almost a low-hanging fruit continuation, potentially 8-hour breakdown. Here, pulling back up, maybe you get a 4-hour fake out high continuation here as a first entry, and then an 8-hour breakdown as a continuation entry. And then here you would look at range expansions, of course. First target, one full expansion of the 8-hour candle. Second target would be one full expansion of the daily range. And then you have a very nice continuation trade. Again, very few traders typically take these trades because most of them are buying the low of the day. This is exactly what you want to see. You look at that and you see many people are buying that. That's your perfect confluence for selling it. And then you just go short and take the continuation. If you follow my trades, you see I do this a lot. I love to sell low and buy high and just to take the continuations because everyone is doing the exact opposite, and that's how we make money. So let's look at an example of a parabolic day. So now, parabolic day, uptrend continuation. So this is a parabolic day, but on the bullish side. So you need to flip the page I just showed you in your mind. So the long setups are exactly the same as the short setups. So what's the situation? At first, you will clearly see that this is also a 3 sessions of rise. So very often we just have 2 scenarios here. So how do you really know that this is a continuation and not a reversal? You don't really at the moment, but you have some indication. So if you look at the day before, you see that's an outside day. Outside days are parabolic. So you don't trade a reversal into an inside or an outside day. You just don't do that, only if it's very overextended. Then you have an inside week also. So coming out of a coil that potentially blows up from here. Yes, you also have 3 months of longs and you have a first red week. So it's a bit conflicting, but overall it looks pretty parabolic to me. Also, first green day, day in breakout, and then you see here we have the 3 sessions set up at the moment already in 3 sessions of rise. But then let's see what's happening. We are coming into the New York session. You see it took the high, so that was the last push up. You are, as I said, with a day 0 setup, you are looking for longs rather. So I wouldn't short that. And then also, if you get this that early, first hour fake out high, this doesn't look like a reversal to me, but you never know for sure. So you really need to be a bit patient. Then let's see what's happening. It's pulling a bit down and then breaks out. So as long as at that moment, once you're breaking out and trading above, as discussed, you never short anything that's above the 8-hour or 4-hour. If those two are in breakout, you see it, everything is green. You never short that. Only if you have maybe the 4-hour is very overextended, as we had in the 3 sessions of Rise, and you get a very nice fake out high, then maybe if it's overextended across the board. But like this here, also you see the indicator flashes 3-star breakout continuation, low-hanging fruit trend setup in an uptrend, everything green, nothing overextended, so everything points to the top. So you can potentially already take this as a breakout with equity open. That's the aggressive variant. I typically don't do that. As discussed, I wait until 3rd hour, but as you see, it could have worked out already here. Parabolic setups out of New York, if they are very nice, you can take first bar breakout, first bar equity open. It's risky. I rarely do it. I rather wait for the next leg confirmation. So let's see what's happening then. It's pulling a bit back, so this would have risked your entry a bit, but equity open first bar would have been fine. But then you see it comes up here. It's again a 15-minute chart, and you see here you get another 15-minute fake out low continuation. We will discuss entries in the next video, but this is for me a very nice continuation signal. Once you get a fake out on the 15-minute in favor of your trade, that's the perfect entry. Then you have a rollover here and the breakout of the 8-hour candle. Then this would be your next entry. 4-hour, 8-hour in breakout, and then from here you still have enough room to take a nice trade, and you cut the trade then in this case either with time rotations, I mean you come very late into the session then, or with a 15-minute fake out high. So here you see 2 potential entries. Parabolic situation, and it just blows to the top. It never gives a short entry. So what you see with the system and also the indicator, the first most important aspect of the whole thing is that you don't counter trend anything like that. So you don't even look for a short. And then if you like the setup and if you get a continuation signal, then you take the long. The same situation as discussed before. Everyone goes short there. That's exactly your confluence. Market makers love that. They take the liquidity as a present and just stop them all out and blow to the top. And you, of course, if you want to make money, you just join the big guys and take the up move that punishes all the guys that are counter trending. Parabolic session and low-hanging fruit. We will discuss those two together because I have one example that covers both. And also low-hanging fruit, we already seen 2 examples more or less. So this is often in combination with one of the other setups, of course, because it might just be a continuation of any setup. Of course, it's always better you have a parabolic one, but it in theory can happen with all the setups. So parabolic session, what does it mean? Parabolic session, one of Stacey's favorite patterns. Peak formation low, peak formation high, meaning trapping shorts, trapping longs, coiling sideways. So you have a lot of liquidity in this coil and then it just unloads in one direction. So you really want to see this pattern as we just discussed for the parabolic day. You want to have this on a higher time frame. Parabolic session does the same thing on a lower time frame. You really want to see the peak formations typically in the session. So you want to have volume in this peak formations. So there need to be traders trapped. Here, Asia short, London long. Then there's a lot of open interest. And then if this unloads, these guys get stopped out. And these guys maybe also close their positions once they get back to break even, and then the whole thing just blows in one direction and goes for a range expansion. How do you trade that? As I said, you track if the peak formations are within the session. You really want to see a clear parabolic channel. So here, then in the New York session, you want to see the creeping trend, parabolic channel, descending triangle. So really a parabolic pattern, potentially a stop hunt with time rotations. That can also be then a 4-hour fake out high. The 8-hour doesn't work, of course, because it's up here. Then it's not a parabolic session setup anymore, because then it says 3 sessions of rise. Also nice, but that's a different setup. So here you want to see the 8-hour fake out high that is done already by the London session. So it comes back up. So potentially you get a 4-hour fake out high here on the lower time frames as a first potential entry. Then the second entry would be the low-hanging fruit entry once you break down from the 8-hour low. So it depends on how large this range here is. Potentially you could already close your session, your trade here if it's good enough, if you scalp it, or if it's really parabolic and you like it, you just scale in, or you enter here with the 8-hour breakdown. Then potentially for a parabolics, not necessarily, but sometimes it's good. If you're not completely sure, you wait for another lower time frame, fake out in your favor, 5 or 15 minutes, and then you take the continuation. So really wait for the stop hunt, or at least into third hour to take that. Watch 8-hour, 4-hour levels to confirm, and then you have here a very nice parabolic setup that you can look for range expansion. First target, 8-hour range expansion, 1 full, or typically you just take the range expansion of peak formation low, peak formation high, take it to the low. That's the classic target. Of course, you can flip the whole thing also to the long side. That's the same logic. Then low-hanging fruit. What we just had here, that's the low-hanging fruit part of it. But of course, low-hanging fruit can look differently. For example, here you could have a deep breakdown, what you often see. So it's a real low-hanging fruit. It's not just a continuation of the session setup, but you can also have it on the day and with the session. So it might have a higher time frame confluence, bearishly, 3 days of longs, first red day, weekly breakdown, fake out high, for example, potentially also a day 0, fake out high. Then you have a contracting situation here, London inside session, unloading, potentially, it's just a scenario, into the gap time, doing a lower low on the inside in your favor. 8-hour breakdown. So this is already broken down market from the last session, and maybe even from the day. And then you again watch for a pump and dump setup into the New York session. It potentially just pumps up, trades into the daily breakdown level. Potentially you get another 4-hour fake out high, and then you take the continuation down. First target in this case, once this was a deep leg down, the first target would be low of the day. If this is more narrow, then you have to look again, like here, for the range expansions, either the 8-hour range expansion or the range expansion of the day. How to trade it? You watch for pump and dump into the session. You wait for a clear reversal trap with time rotations. So here you want to see the London volume trapped again, peak formation high. People think it's gonna reverse. Maybe it trades even a bit up here. So you need to be careful. Again, you have a 50-50 situation. It could also pull further up again, trapping this whole leg as short, doing another fake out low for a continuation up. So you be patient, you wait until you see the trap. So the trap could be this, or you get here another peak formation high trap. What would be the clear setup here? So you wait for third hour and wait for maybe a 15-minute close here or something. And then you just take the continuation, as I said, to low of the day or potential for a full range expansion. So let's look at the chart to see this in real. So now, parabolic session example. So this is again a bearish setup. or bearish example, and you see that's more or less exactly what we just seen as a parabolic session. It's not the lower low on the inside, the deep one we had through the PD low, previous day low, but it's a smaller lower low on the inside, but it's an 8-hour inside bar. That's pretty interesting. So overall situation, reversal continuation, overextended. That's what you see here. That means you see here everything in breakout, and all overextended, days, 3 days of longs, weeks, 3 days of long, months, 3 days of long. So that's very overextended. And then you see here inside bar on the 8-hour. It triggered it to the low, coming up again now. And there for the moment, you don't take a trade, of course, because you are trading here in 4-hour breakout and in an 8-hour fake out low. So you need to be careful there, but then it comes up and retests the previous day close. As we know, this is a very nice level to take a trade from. And then you wait here for the 4-hour fake out high. So let's see what's happening. 4-hour fake out high, it either even comes up here, because if you wouldn't have an 8-hour fake out high, you would trade into a fresh fake out low. This would be a no-go for my system. But once you trigger the 8-hour again, you see here the indicator jumps in and flashes a previous fake out high, continuation high of day. So it's the fake out high of the day that's relevant here as a continuation, because the day is daily level is here. So fake out high on the day, you come back down, and then you have already the lower time frames rolling over. That's what you see here. A 4-hour fake out high, 8-hour fake out high out of an inside bar, day fake out high, 3 days of longs. Then this is a very nice overall pattern, together with the peak formation high, Asia, peak formation low, London now coming up again, doing a peak formation high into New York. Nice parabolic coil here overall. And then you see this could have been your first entry here with equity open, or it's even a bit before. If you want to take it aggressively, I don't do that. I wait here for the purple line, the 3rd hour typically, and here you would have the continuation trade breaking down from the 4-hour as a continuation entry. So you see here 4-hour breakdown, then the 8-hour breaks down, then the day breaks down, and there is the question, what is your exit signal? I typically wait for the 15-minute fake out low. So either I would close it here if the risk reward is already good enough, but you here in such a parabolic situation, you can also look for a potential range expansion. And you see here it's not the full 8-hour range expansion. You have now an 8-hour outside bar, but it's pretty exactly the 4-hour range expansion. So it's always good to look at the last peak formation low, peak formation high, and project this as a one full expansion down. That's a very nice target. And then if you get a 15-minute fake out low, the candle rolling over here, that's your typical exit signal. So that's the parabolic session. The low-hanging fruit part is in principle this one here. So once it breaks down, it's not a pump and dump, but it's more a parabolic aggressive continuation signal. But then this is kind of a combination of parabolic session and low-hanging fruit. So that's this example, and then with this we are through with the examples. Summary: what are the key takeaways of this video for you? To confirm a setup on the day, as we discussed here with our examples, you always want to have the daily and the 8H bias aligned. That's very important. That's the core of my system, and this keeps you out of a lot of trouble, out of counter trending, and you always have the basic bias aligned with your trade. The 8H for me is the absolute core of the system because it connects the higher time frames with the lower time frames, and if you think from there, you always have a very nice view over the overall situation. Then strong setups show alignment of the higher time frame. So you start with day and 8H, but then you look again to the higher time frames. Are they aligned? Are you trading with the trend really, or are you consciously counter trending in a situation that shows a strong setup on the day? Then number 3, discussed today especially, never force a setup. Trade bottom up. So you really, sure, you do your thesis generation, you have your signals, but then once you come into the session, you kind of start clean sheet. You don't force anything. You really stay open. You try to assess what's happening in front of you, completely unbiased. And only if this confirms in a direction, then you zoom out again and think about what was the thesis. Does it align? Is it a nice setup? And then move on to potential entry confirmation and trade management. Then, very important for me, this is one of the key cornerstones of my system. Also, Stacey stresses this a lot. Timing gives the rhythm, time rotation. So always wait for minimum the 15-minute for your entries, better the M30, even better the 1 hour rotations. So for me, the 1 hour rotation, 10 o'clock into third hour is my sweet spot. I only consider trades from there because you have much more data and you have much more follow through, and mostly the traps from equity open are in, you see them, and then you just follow the move and follow the trades with the big guys, and then have a nice momentum in the back of your trade. And also for taking profits, we will discuss this in the next video. Timing gives the rhythm. So once you're running into major time rotations, especially if you are around levels, consider cutting the trade, because very often you get a huge pullback from there, and then if you still like it, you can re-enter. But why would you hold your trade with a 50% pullback or something once you can just take your money and then consider re-entry or just leave it as it is? So that's it. Thank you for staying with me so long. I hope you liked it and it was helpful. If you like this style of thinking around trading, subscribe to the channel. Part 3 will come shortly, focused completely on entries. What is the next step from here? Entries and trade management. How does this work with multi-time frame? How do I think about it? I have a lot of concepts and rules around this. I will go deep into that. If you have questions, please feel free, post them into the comments down below. If you are interested, look in the description box below. There is a link to my Discord. There's a lot of free content there. There's a lot of like-minded traders that post their questions, ideas, trades. I post there a daily heat map before the New York session with all my thesis generation. Not real signals, but you see all my analysis. And also I post my trade summaries there, so you can see there how my system works in reality and in live. You can check out my WAP. There's also a link in the description box. There's a free document on my trading approach and everything around it. And finally, if you're interested in Trend Predator, as you've seen, all the analysis you've seen on the charts was done by Trend Predator. It can be on your chart in minutes. There's a free trial available. Just follow the link in the description box and you are all set there. So thank you for watching. Hope you liked it and have a nice day.